Hey everyone, welcome to this episode of Living Vogue Connect, and I have the pleasure today of talking to our preferred lender, Tom Rydberg. So Tom, thank you for joining us today.
Hey, Matt. Thanks. Always good to be here.
Yep, and just to let everybody know, we did talk about this earlier. Even though we're going to talk about mortgages and lending and all that, we're going to make it fun and a little light and really just give people information regarding what's going on in the market, what they can expect, and just a few maybe special loans that they might not know about.
Sure.
Right?
Yeah, no. Different loans, some different strategies, what we're hearing in the market and how that impacts people's ability to buy and sell real estate.
Yeah, because especially in this last year, there's just been a lot of changes. There's a lot of influences on interest rate. They've gone up. Are they going down? Where are things going? So why don't we start there? Because
Sure.
I think that's what's on everybody's mind, because we heard, okay, all right, the Fed's going to lower interest rates, and now the housing market's going to boom again, and we really haven't seen that.
No. And what I've learned over the last couple of years, people are really good about interpreting data. They're not really good about predicting the impact of future data. So what I mean by that is, for the last couple of years, we've been told that inflation is coming down, we're getting closer to the Fed's target, and we're going to see long-term 30-year mortgage rates drop. And we've seen that in pockets, but I think the big head fake came about a month and a half ago when the Fed cut interest rates by a half a point. And clients thought, okay, here we go. This is the start of a bigger drop going into next year. Lo and behold, when it started to become apparent that maybe Donald Trump was going to win the election, the Republicans would get control of the House and Senate, the markets thought, well, maybe that's not such a good idea as far as interest rates. And it's kind of confusing because why would one political party or one president have that much of an impact, right?
Yeah.
So without getting into a lot of details, just to keep it fun, but it's inflation. So Republicans are seen as more inflationary because of tariffs that Trump talks about, along with employment. So immigration, which is a big resource as far as employment, if that gets cut off at the borders, there's less workers. Supply and demand suggests that wages are going to go higher, which is also inflationary. And then tax cuts, stimulus plans. So that's the logic behind it. Now,
but the reality of what actually happens is anyone's guess.
Exactly.
Right?
Stay tuned next month. So something else could change and pull rates back the other direction.
Yeah.
So what I think people, so right now, let's just say as a general reference, rates are 7%, right? And some people are going to get a little bit lower, some are going to get a little bit higher. When people heard that 2 years ago, you would have thought that the world was going to end. So people are definitely more comfortable. They're not thrilled about it, but it's better than 8.5, where things kind of topped out at a year ago.
Yeah. So we're getting to a level that's more normal, but because of what we saw during COVID with 2.5%, 3% interest rates, I think people are starting to realize, okay, that's not coming back. That was a fluke, and let's hope it doesn't come back, right? Because if it does, something's not going right in the world.
Yeah, something has gone wrong. No, that little period is going to be a little blip on a big graph someday, and people will talk about it, but it's very unlikely we get back to those points. And I think people realize that, and now they're just trying to, kind of plan like, hey, what's 5% going to look like? How realistic is that? And 6 months ago, you hear the Fed talks about these dot plots on where they think inflation's going to go. And that was kind of on, a realistic expectation for next year, maybe somewhere in the low fives. But now that we're seeing employment still is stronger than they had expected, inflation has come down, but it's kind of plateaued. That, maybe 5% isn't even a guarantee, which, from a client standpoint or realtor standpoint, I'm actually hearing a little bit more urgency, like, oh, maybe I shouldn't be waiting for something that may not come. I'm going to evaluate, what these numbers look like in the current market, and I'm going to live with them. And if they come down later, fine, but I'm going to budget around it.
Okay, I'm glad you said that, because that was going to be my next question is, in the industry, what are you seeing? Because as a realtor, we always say, look, the best time to buy is now. Regardless of interest rates, you can always refinance if you need to, and that's usually our shtick, right?
Yeah. People love to, I don't know who coined this phrase, but you you buy the house, you rent the mortgage, right? So you're
Yeah.
going to be able to refinance, which is true. I lend all over the country, so the advice we give to client will vary dramatically depending on the type of property and where it's located, because
Okay.
Florida does tend to have higher fees than other parts of the country. So it's easier for people to refinance and limit their closing costs and recoup that. So that's important for people to be aware of. But I think the strategy too for Florida is, I've had clients that are maybe moving from Ohio, or they have a property in New Jersey or some other Midwest state. They'll leverage that. They'll refinance, pull cash out so that they can buy as a cash buyer in Florida.
Okay,
And that's been
yeah.
a very popular strategy that has some I guess advantages besides just a lower interest rate. Sometimes you can get lower costs, and it helps you negotiate sometimes a better deal.
Absolutely.
But with that said, I don't know if you've noticed this on the real estate side, you can make an offer with financing and you don't get as much pushback from the listing side as you did a couple of years ago
Yep.
too. So with every market, there's advantages and disadvantages. And I think that's where working with a good realtor that understands that makes a big difference when you're showing and negotiating for clients.
Yeah. Well, yeah, I mean, it definitely helps having the right realtor. But I can tell you this, it absolutely means everything having the right lender who knows what they're talking about, who's on the ball, that doesn't allow things to kind of get stuck in the weeds, and is actually responding back. And that's one of the things that I love about you is, and this is kind of a side tangent of what we were just talking about, but you are very responsive, and that means everything too.
Yeah, good or bad, mortgages are my life, right? Which I'm at a point in my life where my kids are grown, love them, they love me, but they're not wondering what I'm doing on a Saturday night or, a Tuesday after hours. I'm not running kids to soccer practice and stuff like that. So yeah, my clients and my realtors are my passion, and being accessible when you're writing up deals and people have questions. You can't always wait, till the next morning.
Yeah.
Even though there's this philosophy of having, I guess, balanced life. I don't know. I mean, it works for some people. It doesn't work for me.
I don't know what balance is. To me, if you're living a balanced life, you're just getting by.
Right.
You want to grow, you want to expand, you want to be better.
Yeah.
There isn't balance.
There's a hustle.
Yeah.
You got to hustle.
Now, it might annoy Janelle,
Yeah.
when you're on the phone Saturday night, but
Right. Yeah.
you do what you got to do.
For sure.
So getting back to kind of what you're talking about with clients who, moving down to Florida, obviously we have a lot of people who are buying second homes, and some of these condos are properties that get rented out often. So sometimes that's hard to get or non-existent of being able to get a conventional loan. So
Right.
what other options are there?
So besides the strategy of, that's another reason they'll leverage other real estate they have so that they can pay cash on a condo.
Yeah,
But
which I think is
condos
smart.
in general right now. So if, you have to kind of, you get the client approved, but then there's the whole, we don't know what you're going to be purchasing and what is that condo going to look like. From restrictions, you have a lot of new laws that went into effect as far as reserves. So I always plant that seed like, hey, we're going to try to go conventional, but we have alternative loan programs. They'll call them non-QM, which would be for non-warrantable condos. So you have...
And non-warrantable is...
It's a very general term, and it used to be that it would be non-warrantable because of maybe deficiencies with a budget or one entity owned too large a percentage of the units, or during the recession years ago, there were too many delinquencies. So it can be any of those reasons or none of those reasons. It could be because they allow daily rentals, or that there's a kind of like a motel component to it, like they call them condotels.
They have like an on-site rental management office.
They have a cleaning service, kind of, and even if it doesn't necessarily look and feel like a condotel, if they're allowing daily and sometimes even weekly rentals, that'll throw it off.
Okay.
So, we're fortunate. We do have access to broker programs, even though we're a mortgage banker. We have broker opportunities. We also have some portfolio loans where Luminate Bank will actually fund those loans.
Okay.
And that gives us a big competitive advantage. It's good to kind of have to know that ahead of time. The problem with condos is that sometimes you don't get the most vital pieces of information until the very end. And then you're scrambling. And it could have to do with the insurance policy. So you can have everything approved, but if that condo board chose to try to limit their cost of insurance because insurance costs have gone up and maybe they don't have the proper coverage, that in itself, and then you're kind of left like, okay, now what do we do?
Yeah, what are the options now? And if you don't have the right lender that has options,
correct,
you're really scrambling.
Yes. And and that's where working with a realtor who has some experience and is willing to reach out to the listing agent and kind of fact find, because nobody wants to go under contract, tie up a property, spend money on inspections, have everything
30, 45 days later.
Exactly.
Sorry,
no
we can't
fault
do it.
to really anybody's. It falls apart.
Yeah. All right. So that, a lot of what we were just talking about is more people who maybe have bought homes before.
Yeah.
What about for the new home buyer? What are things looking like right now, and what's available to a new home buyer or first-time home buyer?
In Florida, it's been the best time for a first-time buyer in probably 5 years, in my opinion.
Okay.
Well, you have a little bit more inventory to choose from, and because you have more inventory, things aren't moving quite as quickly, so that it's not out of this, it's not unreasonable to think that the seller would help out with paying some closing costs, a little bit more flexibility, where you can ask for VA or government financing, which sometimes has a negative connotation as if it's less reliable than conforming, which, believe me, is just not true.
Yeah.
As long as you're working with a qualified lender that knows what they're doing, there's just advantages to those programs. But even if you try to explain that to an agent a couple of years ago, all they wanted to hear was cash. Are you cash or are you putting 50% down? That's what they were kind of sometimes even holding out for. So there are many, many first-time homebuyer programs that give you preferred rates, so lower than what the most qualified buyer might get if they're not a first-time home buyer. Now, many of those are they have income restrictions, so not everyone's going to qualify for that, which can be a little frustrating. But that's where planning, and this isn't, regardless if you're a first-time home buyer or a seasoned home buyer, planning ahead, whether it's to see if your condo is going to be, qualifying for conforming financing, or if you're a first-time home buyer and you want to research different grant programs, the more you plan ahead, I think the more success you're going to have.
Yep. I say that with everything. It's, that old saying of if you fail to plan, you're planning to fail.
Yeah.
And that's true in everything that we do.
Yeah. So sometimes I get clients, they call me on a Saturday, they want to get pre-approved, but they don't want me to run their credit, or they don't want to provide any paperwork.
What are you hiding?
I'm like, well, there are websites you can go to and you can plug in whatever you want and they'll spit out an approval letter. And those are the ones that typically I get calls on, 2 weeks before closing.
Well, I did this online. They said I was approved.
Exactly.
So that means I get the funding, right?
Yeah. So that's super frustrating. But I get it. Consumers don't necessarily, just because a realtor says, hey, call Tom, he'll be able to answer your questions. They don't want to feel like they're giving this big commitment to somebody they don't even know. And as much as we hope everybody works with us, there are going to be circumstances where they don't. We still want to try to give you the right guidance.
Yeah.
And I have, for your clients, as many others, sometimes I'll just be an unbiased third party to kind of evaluate what another lender has told them, just to kind of make sure that it does make sense.
Yeah.
So.
Okay, cool. Well, staying on the line of first-time home buyer, the one question I want to ask that goes along with this is, what actually is a first-time home buyer? Because it doesn't necessarily mean you've never bought a house before, correct?
Yeah, correct. I don't know how this came to be, but yes. So in most circumstances, first-time home buyer is defined that you haven't been a title holder in a real estate for the last 3 years. So, you could have had multiple properties, but just for whatever reason aren't
You've
currently
rented for the last 3-4
right.
years,
or in some cases, I'll get a question: should we put both me and my spouse on our mortgage? And I'll say, well, generally, it doesn't really make a big difference unless one person has a lower credit score that could hurt you, or maybe you have certain debts that are throwing off your approval. We'll put both people on, but there are advantages potentially if you think you might purchase another property down the road. I've had a situation where one person was on title and on the mortgage. So the other spouse was a first-time home buyer down the road. It also alleviated the need to maybe have to sell that property before they closed. So you could have two people take advantage of a first-time home buyer program within...
If you plan ahead.
If you plan ahead, exactly.
Yeah, all right. And speaking of planning ahead, so this is kind of my last question, then we can go on to anything else that you want to discuss. For business owners, so entrepreneurs, people that are 1099, they don't have a regular pay stub.
Yeah.
How is it getting a loan for those people?
Well, it's getting better, right?
Okay.
So I feel like the agencies, Fannie, Freddie, FHA, they are a little bit behind the times as far as really, and we've had this discussion over the last couple of years. I feel like a year ago.
They always say, oh, a regular, 9 to 5 is more secure. I'm like, I don't know about that anymore.
We're in that kind of economy where a lot of people have multiple jobs.
Yeah.
So, you could have 2 part-time jobs, but if that second part-time job has changed in the last year or two, all of a sudden, they don't want to count any of that income, even though you've been steadily working for 2 jobs. So I mentioned non-QM, which stands for non-qualified mortgage, which just means anything other than Fannie Mae, Freddie Mac, FHA, VA, right? So it's just Alt A, think of it. Luminate, and this is one of the big, I guess, competitive advantages we have, Refine Lending as well, is that we have an in-house non-QM department. So we're not brokering out those loans necessarily. We're brokering them to ourselves, essentially. So that, along with the portfolio product, allows us more flexibility. So general guidelines would be, if you are 1099, it helps if you have a business bank account set up, but a lot of people don't. They might be 1099 by one company who, a year ago W-2'd them and just changed how they want to structure and do benefits and things like that. So if you're making regular deposits, and we can track that for 12 months, sometimes they'll prefer 24 months, but if you have 12 months, they'll take a percentage of that and use that as income. You will be required to put a little bit more money down. You won't be able to do like a 3 or 5% down program, but good credit, 20% down, in some cases maybe even 15 or 10%. You'll have some financing.
All right. So there are some options. Just it is, again, it goes back to planning, right? Because if you have to show consistent deposits, it can't just be like, well, I just pay myself every quarter, or I pay myself, at the end of the year, I just take whatever's left over, and that's how I show my income.
Right. And not in all cases, but in many cases, people fall into these loan programs because of the way they're doing their taxes. Within the letter of the law, it's hurting them with their deductions. So if you look at it, people will be like, well, how should I file my taxes next year? I said, well, I'm not going to tell you how to file your taxes. I'm not going down that road.
You're not the tax guy,
but
right?
I would say you're probably, even if your interest rate on your mortgage is a little bit higher, it probably is offset by the fact you're paying less federal income tax.
Yeah.
So you can't have it both ways. You're going to have to give someplace.
Yeah.
And when we say 1099, that is a very general, general way to describe it, because some people will have, again, one 1099. They almost feel like a W-2 employee. And then you have other people that they might have 10 or 20 different contractors that they work with. And that gets a little bit more complicated. They're probably doing a Schedule C on their taxes. And I'll tell you, a lot of loan officers who aren't familiar with self-employed borrowers will misinterpret how to get that loan approved. So just because one lender said, hey, we can't do your loan because of the way you do your taxes, doesn't mean that we won't be able to.
Gotcha.
And then again, we have a fallback.
Shop around, right?
Yeah, or just
go right to you.
Get a second opinion. You're right, exactly.
All right. So anything that you want to share that maybe we didn't cover?
Well, I think that non-QM space is, that and bridge loans we've talked about before, but construction loans are probably the 2 hottest topics, especially in Florida, right? So you have a lot of people, unfortunately, that had significant damage to their properties, and because of that 50% rule with FEMA, they have to rebuild, right?
Yeah.
Either knock it down and sell it or rebuild. So we do have a one-time closed construction loan that's very popular with the builders as well as consumers. And then that non-QM, besides the bank statement program, with investors, we have a debt service program, which means they're focusing on the cash flow of the property. So I know you work with a lot of investors, and they've done very well over the years in Florida, and they look at the long term. Florida is here to stay, and it's going to do great. But from a cash flow standpoint, that doesn't always show up on their tax returns, or they just don't want to deal with all the paperwork that is sometimes required. So we will look at simply, does the property, based on market rents, cash flow with their mortgage payment. So the higher that is, so let's just simple numbers say that your principal and interest payment is $2,000 a month. And if the market rents, they'll take a percentage of market rents, ends up at $2,000 a month, then you're at your ratio is 1. Some will go below 1. If you cash flow more than positive, then you're going to get better terms. So
so they look at that as a whole.
Correct.
On the construction loans, is there like an average, like loan type on that, or terms?
So we'll do conventional VA, FHA. We're getting close to, where we're not there yet. And that goes up to the conforming loan limits for Fannie Mae, which is right around $800,000. Those will get increased here in the next month with the new year. So in most markets, so like if you already own your land and you're just doing a rebuild, that's not a new purchase, then $800,000 covers a lot of those clients and will work. If not, we have a 2-time close if they need more funds than that.
What's a 2-time close?
2-time close would be, we would do more of a portfolio loan outside of Fannie Mae's guidelines. It gives a little bit more flexibility with how the financing is structured. But then when construction's complete, they have to refinance that to a final loan. Where the 1-time close, you close, builder starts getting paid their draws. You don't have to pay additional closing costs for a second closing. And once completed, your rate just floats down to an index of what the market rate is.
Okay. Very good. All right. So last question for you.
Okay.
What does Tom the Lender love about Florida, or Sarasota specifically?
Yeah.
And what do you like to do for fun outside of your mortgages?
So I did a lot of research on Florida coming from Chicago 5 years ago. And I went to the East Coast, and I went down to Naples and went up to Tampa. And there are a lot of fun places. I realized that, who you're with is going to dictate a lot of if an area works for you. But without a doubt, I fell in love with Sarasota the second or third time I came here. And I've never looked back. My daughters live in Tampa. They want to come to Sarasota, Lakewood Ranch, which is kind of an extension of Sarasota. So I love it. I love being outside. I like to golf. I used to love to golf, but I'm struggling a bit right now.
I'm trying to learn.
I like it.
I haven't done it yet.
I think people, when people describe Lakewood Ranch in Sarasota, they talk about the weather. They talk about the beaches. They talk about maybe some of the politics and tax advantages. But I think what gets overlooked are the people. People have a certain, way of carrying themselves. Like, people want to be outside. They want to do things. So I think there's, especially Lakewood Ranch, a lot of my neighbors who are all retired, and I see them off on their golf carts or going to play pickleball. It's just an active lifestyle. And I think that gets overlooked sometimes.
And people will look you in the eyeballs and say hello.
Yes.
Yeah, I love it. All right. Well, Tom, thank you. I appreciate it. We'll make sure we have Tom's information on the video or in the description where this is shared. But thank you for joining us, and we'll catch you on the next one.